us ever going back to a physical gold and silver world is difficult. But I do think gold will undermine or peg a new system. And I think that silver should be reclassified strategic. It should not be industrial. It is needed. It is depleting. And you can see by the draining of the exchanges that the sophisticated traders around the world understand this. And again, if 45 million ounces stand for delivery off of COMEX in December, ask yourself, who's got that kind of money to buy 45 million ounces of silver and take delivery? Now, it's not all one person, but you're seeing massive deliveries. And this is indicative of the awareness that whether we go to a bimetallism world or just the realization that gold and silver are true money, it's happening.
In today's news recap, silver dropped as us 10-year Treasury yield neared 4.8%, highest since October 2023. Silver prices declined sharply by 2.15% to settle at 29.90 as the U.S. 10-year Treasury yield approached 4.8%, its highest level since October 2023, prompting a reduction in expectations for Federal Reserve rate cuts this year. Strong U.S. labor market data, including unexpected job growth acceleration in December and a drop in the unemployment rate to 4.1%, reinforced views that the Federal Reserve would likely maintain its current policy stance. The Labor Department's report highlighted improvements in key labor metrics, easing fears of market deterioration. Globally, the silver market remains under a structural deficit, with a 4% decrease in the deficit projected for 2024 to 182 million ounces. Total supply is expected to grow by 2%, driven by higher mine output from Mexico, Chile, and the United States, alongside a 5% increase in recycling due to heightened silverware scrap in Western markets. On the demand side, industrial applications, including electric vehicles, solar panels, and electronics, along with recovering jewelry consumption, are anticipated to drive demand to 1.21 billion ounces. Notably, physical investment is forecasted to drop by 16%, while exchange-traded products are on track for their first annual inflows in 3 years, bolstered by a 32% rise in spot prices this year. Technically, the market is under fresh selling pressure, with open interest increasing by 5.41% to 21,873 contracts. Before we dive into the best clips of the week, make sure to smash that subscribe button and check our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest and most reliable service out there. Just a few clicks secures your data and keeps unwanted eyes at bay. Plus, if you're a stacker seeking truly independent market insights, visit goldsilverstacks.com for our Stacker's Handbook, loaded with strategies to safeguard your financial future so you don't rely on commentators for market insights. Enjoy the episode.
Yeah, well, maybe that's why they haven't audited since 1953. It would be a massive blow to the United States because we've claimed that we've had more than anyone, for the last forever, since the end of World War II, and we've reported it on our balance sheet forever. It would just basically say that everything that we talk about financially is a lie. And if you are going to do something like back a new system with gold, you would definitely, that would be the step number one, is to have it audited. It belongs to the people anyway. It should be demanded, but about 6,000 ounces, but 6,000 metric tons rather. But because they say they have like 2,600 and we suppose they have 8,300, something like that. But Alistair McLeod will tell you they have over 40,000, China does, and 18,000 by the state and 22,000 by the people. The other way around, 18,000 by the people, 22,000 by the state. They have a lot more than that probably.
No doubt about
it. They've been mining between 300 and 500 metric tons a year for 25 years. And they've been mining gold that was uneconomical, even if it cost them more to pull it out of the ground than it was worth, because they play the long game. And that's something that people in the West don't understand. Again, instant gratification is not fast enough.
I would be willing to bet that China has more gold than the US, actually. Yeah, because a lot of the mainstream financial press, they always say, well, the US is the biggest holder, China only has 2,300. But yeah, the Chinese, they're keeping it quiet. They have a lot more, I think. And do you remember when Mnuchin was Secretary of the Treasury, he went with his wife to Fort Knox, and there's a picture of him holding a gold bar or something, and he said, gold is safe. He didn't say the gold, that we have here, the gold is safe.
Right.
He said gold is safe. He should have said the gold here is safe.
Right.
But he didn't use the. And that, I think that's really telling. Because he probably saw there was nothing there.
In today's news recap, Goldman Sachs now sees $3,000 gold only next year as fewer Fed rate cuts slow 2025 price growth. Gold's record-breaking rally will slow down this year, with the yellow metal taking longer to reach the $3,000 level. But steady central bank demand remains a key long-term price driver, according to a leading investment bank. Goldman Sachs Group Inc. announced on Sunday that it no longer expects the gold price to reach $3,000 per ounce by the end of 2025, with the Federal Reserve's shallower rate cut path pushing the forecast to mid-2026. Goldman analysts, including Lena Thomas and Don Stuyven, wrote in the update that slower monetary easing will likely depress demand for gold-backed exchange-traded funds, ETF, in 2025. They now project the spot price to top out at $2,910 per ounce by the 2025's fourth quarter. The analysts added that weaker than expected ETF flows in December, driven by easing uncertainty after the U.S. election, also resulted in a lower starting point for gold prices into the new year. Opposing forces, lower speculative demand, and structurally higher central bank buying have effectively offset each other, keeping gold prices range-bound over the past few months, the analysts wrote, but added that demand from central banks will remain a key driver for prices over the longer term. Looking ahead, we forecast monthly purchases to average 38 tons through mid-2026. Goldman's economists now expect 75 basis points of interest rate cuts this year, down from their previous prediction of 100 basis points. The updated forecast is still more dovish than current market pricing as the bank sees underlying inflation trending lower. The analysts also said they were doubtful that the incoming Trump administration's policies will necessarily lead to higher interest rates. Now, we'll show you more clips, but first, subscribe and turn on notifications so you do not miss out our daily recaps, and check our NordVPN offer if you're a serious stacker, because keeping your browsing data safe from the government will be crucial moving forward. Also, check goldsilvermerch.com to get your gold and silver gear today. Premium quality shipping worldwide by Stackers for Stackers. Enjoy the episode.
Do you think banks are heavily buying crypto now to offset the naked silver shorts? No, I don't. I think that to me, the mystery with crypto is the role of the stable coins and the treasury market. I think that's why they're okay with it, because you look at all the stable coins, they're 85 to 90% US treasuries, the rest predominantly US cash. And that's supporting the legacy system as other countries are shedding it in favor of commodities. It's the ironic part of all of it is people think they're leaving the legacy system, they're supporting it. And I don't think that's why they're doing it, to be honest, at all. I don't know if the banks are heavily buying crypto or not. I can't say that I know that definitively. But what I do find interesting is that all we hear about is the investor buying crypto, but what are all the central banks doing? they're buying gold. In fact, in the last 2 months of the year, the central banks doubled their 12-month moving average in accumulation. And between accumulation and repatriation and taking physical possession, removing any of the counterparty risk that, guys like Big Swear said, if you don't hold it, you don't own it for years. Well, you're seeing that at the highest level. And that to me, I think is the one interesting thing. And, the stuff that Mario and Kevin and I talk about central banks buying gold, 1 out of a gazillion people in this country know of. Yeah, all of you know about it, but none of your friends or family have any inkling. All they hear is Bitcoin, 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 Bitcoin. They don't hear, but the most knowledgeable people on the planet who know the playbook, who've written the playbook, who all hang out at the same parties, they're all buying gold and bringing it home. So I don't know. What does that mean? Could it be a rug pull? We talk about rug pulls. And again, I'm not a crypto basher at all, right? Not. When you think about rug pulls in the deep state, think where everyone's money is. It's in 7 stocks, it's in Bitcoin, and it's in money markets, record money markets, 7 trillion plus in money markets. And you bring down one big bank, you can bring down the entire system just like that. Then you reset, then you come in and issue your new system. And I'm not saying that's going to happen. I'm just simply saying that it's a precarious position where there is very little diversity in large pools of assets right now, that if there were some nefarious act on the horizon, it wouldn't be so hard to really upset the apple cart. What do you think about that?
What do you think of today's episode? Do you agree with the insights shared about the situation of gold in Fort Knox and the state of the crypto markets? Is the gold in Fort Knox truly secure, or do you think it's just a relic of a bygone era? And as for crypto, are you bullish on its future, or do you see it as a speculative bubble waiting to burst? Share your thoughts and strategies in the comments below. Your input sparks some of the best discussions in the community. Don't forget to check out goldsilverstacks.com for our Stackers Handbook, or grab some premium quality merch to represent your passion for gold and silver at goldsilvermerch.com. Designed by stackers for stackers and shipping worldwide. Everything helps to support our channel, as we don't sell you gold and silver or have any sponsorships. Thanks for tuning in now. Watch this video right here because it's a perfect fit for you, and I'll see you on the other side. Keep stacking.